Brokerage company LBLV Expectations for 2020. What to hope and what to beware for investors in the new year. By the end of the 2019, analysts didn't come to unity regarding scenario of global economic growth for the next year. Market participants and their investment portfolios are mostly dependent on trade dispute between the United States and China, resolving of which would return a balance to the world's economic system. Should we expect something like this next year? Searching for the answers of these questions, we have selected 5 main factors which impact on prices of your favorite trading instruments. Year of presidential elections in the U.S. As the market is seeing more increasing aspiration of Donald Trump to be re-elected for his current position, this option has high chances to become true. However, a readiness of President's administration to confront China before the elections raises certain concerns. During the pre-election campaign next year, White House will show the project which aims to reduce tax pressure on the middle class. Johnson will close the Brexit issue. We all remember the decisive victory of Conservative Party of Tories headed by Boris Johnson in pre-term election to the British Parliament. Continuing as Prime Minister, Johnson now can turn his plan of agreement with the EU into reality. He plans to withdraw the kingdom from the bloc all the way on January 31st, 2020, as no-deal Brexit would be devastating for the world's economy. Reduction of crude oil inventories. Experts suggest there will be an oil prices increasing in the middle of 2020 due to irreversible demand growth from emerging economies. This will lead to a drop in global stocks of black gold. The future fast is also maintained by analyst confidence in production cut by the OPEC Plus members. All these things were caused by easing in China-US trade relations and also by Saudi Arabia's decision to substantially reduce oil supply. The most prospective IPO in 2020. According to the analysts' expectations, a startup segment will face with a highly volatile year. With the correction of the S&P 500 in summer 2019, many firms postponed their listing plans, but not the Palantir. It is one of the most confidential and expensive Silicon Valley projects, which is a software developer to analyze large data for security purposes. Among the startup's clients, there are investment banks, hedge funds, and U.S. intelligence agencies. EU inflation growth expectations. Given current developments in Europe at the end of the year, fallouts for the markets are expected in 2020. In short, European population is tired of stagnating economy, low income, and high level of immigration. These factors have forced people to choose the policies of those parties which are the best analog of the EU leadership course. Eventually, there may be a split between the bloc leaders, which will lead to breach of fiscal discipline and consequently to a 3% increase in the budget deficit next year. Total background. The investment community should not be afraid of a global crisis next year. The reduction of the global economic growth rate to 2.5% is the biggest threat to markets in 2020. In this case, the commodity segment will get hurt. The emergence of the so-called black swans, which may come from the PIGS and Persian Gulf zones, is another matter. This may also include the growth of the U.S. public debt with a budget deficit of $1 trillion. Nevertheless, analysts are looking forward to maintaining stability in major markets and in the financial world as a whole.